So in reality, we're talking about the tax advantages of an entity taxable as an S corporation versus an entity taxable as a, say, a partnership, right? And the partnership assumes you've got more than one member, all right? So they both have pass-through taxation, typically speaking. So the entity itself is not going to pay income tax. It's going to file a tax return, and then it's going to issue its owner K-1, and then the owner is going to include that owner's allocated share of taxable income on their personal tax return, and you're going to pay tax at that level. So one level of tax, generally speaking. There are some special S corporation exceptions, but generally speaking, one level of tax. So that's good, and that's why you don't want to be a C Corp, because C Corps, you get hit with double taxation. Now, beyond that, it depends a lot on the activities of the business. So with S corporations, the owner who also works in the business needs to pay themselves a reasonable salary. And generally speaking, that is, I tell people, what would you have to pay someone if you were to hire them to do your job in the business? That's a reasonable salary, right? It's subject to interpretation, but on that salary, you're going to pay your employment taxes, right? Now, anything over and above that the company makes that you take out as a distribution is profit. And it's not going to be subject to employment taxes. So your reasonable salary, you're going to pay employment taxes on. Anything over and above that, you're not. So that's what people refer to as the S corporation tax loophole, which it's not really, but it is. It makes a good soundbite. On the partnership side, if you're a partner in a partnership and you're working and you're taking money out as distributions, you're going to pay employment taxes on every penny. So that's the difference there. Now on the flip side, if you're going to be depreciating taking a lot of tax deductions, or if you want to make a lot of special allocations, and you're going to be borrowing money to acquire assets, a partnership might be something that you want to look at, because it's a little easier sometimes to take those tax losses on your personal tax return as opposed if it was a S corp.